Hey guys, what's up? Welcome to a new video. Today I'm going to be reviewing the OmiseGo, like OMG versus BTC. This is the 4-hour chart from Bittrex. As you probably know already, I only review coins that are actually uptrending. I only review coins that are actually uptrending on the daily chart. If I see the daily chart uptrending, this means that the general trend is up. It's uptrending, because if you look at the daily chart, you have the big picture, right? Then after I look at the daily chart and I find that it's uptrending, then I can go into smaller time frames, for example, the 4 hours one, and do my analysis from there. And because I know the general trend is uptrending. Now, what did I find here on the OMG chart that I think is attractive? So I think what's happening here is we're going to find a classic pattern in trading. It's called ABCD. So if you go into Google Images and you just type ABCD pattern, you will find here all these drawings. So let's just take this one, for example. So you see the legs go from A to B, B to C, C to D. And here you have a reversal. So basically, this is going to be a very basic explanation. Of course, there's a lot more to it. There's a lot of math into this, but the very basic for anyone to understand is that this basically means that A to B, from A to B, there's the same distance as from C to D. So if you see here, the A to B leg is exactly the same length as the C to D leg. So this is the very basic in this pattern. All right. It can be used for a number of things, but I'm going to be very specific here, very basic for the purpose of this quick tutorial. Okay. So what I find here is that this could be the first leg from A to B. We would find this. Okay. Actually here, to be fair. So this is from A to B. Now, if this pattern completes, I copy paste the same line and I would put it here. And this means the price should be going somewhere very near this point here, because, you know, A to B equals from C to D. So why do I think this is going to happen? Of course, I have no warranty, so I'm not advising here to go ahead and buy. You need to be very careful, have your own plan, compare it with other people who is reviewing these coins. This coin, don't just take my advice, only do your own analysis and see if it compares to, you know, if you get to the same conclusion, then maybe think about putting some money here, but if not, this is not advice. Now, the reason why I think this could be the case, this could actually complete, is because I also see a triangle here getting tight. So from here and then here, I see a triangle pattern, right? The price is bouncing in between this trend line, support trend line below, and resistance line above. So this is forming a bullish triangle here. The price is locked in this triangle, it's getting to the end, so it's going to have to make a decision whether break on the downside or on the upside. When you see triangles, it's 50-50, it's going to break on the way down or 50 for the way up. So there's nothing confirmed here. You have to be very careful. So more risky people, they like to buy the dips in triangles and then hope that it's going to break on the upside. That's another strategy. I'm not saying there is anything wrong with that. But me personally, because I am very conservative, especially in this crypto market at these high levels that we are right now, this is crazy how parabolic we've been already. So we are at very high levels. Anytime this whole shit can reverse and crash the whole market in general. I know, I acknowledge this risk. That's why I'm extra conservative in this type of market conditions. But that's just my style. There's nothing wrong, as I said, with buying the dips on the triangles or on patterns, and then you know, you're gonna be making more profit if it turns out to break on the upside. So it's just two different styles to do it. But so when you see a triangle pattern, what happens is if it actually breaks on the upside, the price will usually pump all this distance, like this part of the triangle. If we draw a perfect vertical line here, okay, we drag this line here. Once the price breaks out the triangle in the upside, it will usually pump all this distance here. So this distance, it's close enough with my other with the other distance from my ABCD pattern. Okay, it's close enough. So here I have two indicators telling me this could have a bullish movement, a very nice bullish movement here. If I look at the volume, we still have okay volume. It's drying a little bit, but not much. We had a lot of green spikes here and another one here. This usually means in the future we're gonna have an uptrend. It doesn't have to happen the next day or the same day. You know, it can happen next week or in a few days. But usually volume precedes price. So what you see happening in volume today, it means most likely the price is going to do the same tomorrow. Not tomorrow, but what I mean in the future, you know, you never know when. But we had a lot of green spikes here and we didn't have any powerful up movement yet. So there I have another indicator showing that we could see an impulsive movement on the way up. So that's my analysis for OMG versus BTC. So what I will do though is I will wait and I will only enter my position if the price breaks the all-time high. So as I said, more risky people, they will buy the dips in this triangle, or they will even enter as soon as it breaks this line here, the horizontal top of this triangle. I am extra conservative and I will only enter when we break the all-time highs. We have a spike here on the price, okay, and the all-time, and we got a lot of rejection here. Once the price gets close to this line, I think we're gonna get a lot of rejection. It's not gonna be so easy for the price to break through this line here, and this line here is exactly 0.002376. I hope you can see that on the video. So I will only enter my position if, my long position, if the price breaks out this level and actually stays above it, close one candle, even if it's the 30-minute candle or maybe the 15-minute candle. Some candles closing actually above this level, not just breaking it and coming back down very quick like we see many times. So this would be my position. If I enter, I would enter at this level at probably 0.0025, something like that. So I would enter my position here and I would be having my my profit target. I would be taking my profit target at 0.0032. So let me do this right. Something like that, okay? You don't want to put it all the way up because sometimes, you know, patterns will always be close to the target, but not exactly. So I would be taking my profits somewhere around there, and of course my stop loss will be very tight. If we go below this previous high, then that's enough reason for me to realize that I have been wrong. So let me actually adjust this. I would enter a little bit below. So I would enter here. I would close my stop loss here. Okay, and I would put my profit target somewhere here. So that would be my trade, more or less. Like I can, you know, this is like approximate. Maybe I'm gonna move a little bit my stop loss or my entry target. I have to be, you know, once we get to this level, if we do, then, you know, I will run a little bit more analysis and decide exactly where to take my profit exactly, my stop loss and everything. But this is a rough strategy, guys. You can maybe use it, compare it with your own, compare it with other analysts online. Like if you are part of a Facebook group where people is sharing their analysis for this coin, just compare it with as many sources as you can, and then compare it to your own, and then from there you can make your own decision. But so that's my thoughts for OMG. This doesn't have to happen tomorrow or the day after. These are the 4-hour candles, so we can fit here. We can still be here for another day or two. So yeah, I think that was all for this quick video. I hope, guys, this is clear, and if not, leave your comments down below as usual, and I will try to answer as much as I can. Thanks for watching, and I'll see you soon. Bye.